Is UiPath, ticker symbol PATH, a good stock to buy now? Welcome to Global Value. In today's video, we're going to be performing a fundamental analysis of UiPath. We'll look at it through the lens of Warren Buffett's investing framework. We'll look at 6 key financial metrics before we figure out 3 different fair values to understand what UiPath is worth in today's stock market. Right now, UiPath trades for $22.82 per share. In today's day of trading alone, it's down 6.6%. But in the last year, since March of 2023, UiPath stock is up 57%. That crushes the S&P 500, which is up 33% over this time. However, since UiPath became part of the public markets, its stock price is down 68% overall. Still, while that's heavily down, UiPath is up nearly double from its 52-week low of $12 a share. It's still down $4, however, from its 52-week high of $28 per share. And how big is UiPath? Today, their enterprise value comes in at $12 billion. UiPath is Cathie Wood's second biggest position. She's by far the biggest individual investor in the company. She owns 8% of their shares outstanding, and UiPath makes up 6.4% of her portfolio. She was buying it a ton as a public company at a higher price, but recently she's been selling it in the last couple of quarters. Today, her shares are worth $1 billion, but when she first bought in, they were nearly $2 billion, so she has a loss of about 46%. Today, only one super investor tracked on Dataroma owns UiPath, and that's Lee Ainsley. He has a very tiny position in the company, though he's been cutting it recently. So what does the company really do? UiPath creates an end-to-end platform that provides automation with user emulation at its core. Its platform is built to be used by employees throughout a company and to address a wide variety of use cases, from simple tasks to long-running complex business processes. It generates revenue from the sale of license for its proprietary software, maintenance and support, and professional services. It generates a majority of its revenue from the United States, followed by Romania. Now, starting with our first financial metric, we want UiPath's return on capital to be above 14%. Right away, we can see that they've had negative returns on capital in each of the last 5 years, which we have their numbers for, even though they've just gone public in the last couple of years. One good sign to see here is that their return on capital numbers have at least been trending in the right direction. They're getting closer and closer toward that positive mark, however, they're still negative. This negative return on capital has to do with how it's calculated because it's looking at their earnings before interest and tax. Still, either way, UiPath has had negative returns on capital over this time, so it's an X on metric number 1. In our next metric, we want to see growth. We're looking for sales, earnings, and free cash flow growth across the board. It's harder to make mistakes investing into a growing company. Here, since before the company was even public, we can see they've grown their sales or their revenues by 4 times. Where they're at in their business lifecycle has a big impact on the company. While they have negative net income in all 5 of these years, it's getting progressively less negative. At the same time, the company's also increased their gross profit by more than 4 times. Their margins are even improving. And most importantly, the company has had positive free cash flow by quite a lot in their last year in 2024. Because of how UiPath is growing, we're actually going to give this metric to them with positive free cash flows, strong gross profits, and growth in their sales. It's our first check on metric number 2. Our third metric, here we want to see their shares decreasing. Unfortunately, this is not the case. UiPath has issued a lot of shares, even since becoming a publicly listed business. Since their listing, UiPath has increased their shares by 24%, diluting shareholders and taking away from their ownership percentage in the business. While it's not exactly uncommon and it's one of the ways companies can raise capital, it's not what we want to see for the business. It's an X on metric number 3. What will the back half of our analysis look like for UiPath? Metric number 4 builds on our past 2 metrics. Here we want to see free cash flow per share growth. 2024 was the first year that UiPath had positive free cash flows as a public company. That's great for the business, and they brought in 52 cents worth of free cash flow for the first time. It's a check on our 4th metric, and so far we're split evenly. We have 2 checks and 2 X's for UiPath. Now we'll look at how the company uses debt before we figure out what they're possibly worth. In recessions, it's businesses with too much debt that can have the biggest losses and even go bankrupt. You don't want to invest into broke companies. That's why in metric number 5, we want their net debt to be below the sum of their free cash flows. Thankfully for UiPath, they've had negative net debt over this time. This means they're actually sitting on a cash cushion on their balance sheet. Also, they've now brought in positive free cash flows for the first time as a public company. So not only do they have a $1.8 billion cash cushion, they also are generating cash. It's exactly what we want to see, and this is another check on metric number 5. It looks like UiPath, if they can keep their profitability up, is in a fairly strong financial position. Now, how much are they potentially worth? Our 6th metric also serves as our first valuation. Here we want UiPath's average free cash flows divided by their enterprise value to give us a risk premium compared to the 10-year treasury. This will help us figure out how the company trades compared to the long-term average of the stock market. Right now, UiPath has a $12 billion enterprise value. This is what we get when we add their market cap and their cash cushion together. In the last handful of years, UiPath has brought in $167 million of free cash flow, meaning they generate only $33 million in an average year. When we divide that by their enterprise value, it gives us a very small 0.3% average free cash flow yield, less than 10 times the current yield of the 10-year treasury. However, UiPath has brought in their most amount of free cash flow in their last 12 months. When we divide today's free cash flows by their enterprise value, it gives us a 2.4% current free cash flow yield. That's still down, but it's not nearly as bad. It's also something that could trend in the right direction for the company in the future, so keep an eye on it. Even though this is an X on metric number 6, you're going to want to keep watching. See what our next 2 valuations are worth before you stay till the end of the video for our final fair value and rating. Our next valuation uses a discounted cash flow model. Here we're taking their current free cash flows and projecting them into the future based on historical growth assumptions. UiPath just had their first public year of positive free cash flows. So if we grow these into the future based on their past growth rates, we can get a rough idea of what the company might be worth. Let's assume that they grow their free cash flows at 17% in each of the next 10 years. Then in the following decade, we'll assume that this growth rate is cut in half. After that, we'll add in the company's tangible book value, which gives an estimate of their net worth. If we want a market-beating 15% rate of return, which is what Warren Buffett looks for from his investments, today a DCF valuation for UiPath comes in at $11.78 per share. That's down about half from their current stock price. But keep some key points in mind. While the company trades roughly double the levels of its 52-week low, that DCF fair valuation is right around it. In part because of their high growth, it's also been harder to predict the business for UiPath. A GF value serves as our 3rd valuation, which today comes in at $21 per share, just around UiPath's current stock price. Now let's put all of their numbers together. This far in our fundamental stock analysis of UiPath, ticker symbol PATH, we learned they go 3 for 6 on the Select 6 analysis. The company's grown a lot and they're now free cash flow positive, but they're continuing to dilute shareholders pretty steadily. Another bright spot is their $1.8 billion cash cushion, which together with their positive free cash flows, has the company trending in the right direction. When we combine all of our valuations, today a fair value for UiPath comes in at $14.58 per share. It's down $7 from their current stock price and down more than $11 from their street target price. So what are your thoughts about UiPath? Share them in the comments below, like the video, subscribe for more, and check out this next one.